Welcome back. Well, it's time for our first corporate introduction. Borosil Renewables, so that's the stock on our radar for Q3. The company's revenue as well as the EBITDA surged, but the margins did contract. Also, the company will raise close to around 500 crore rupees via a rights issue. Mr. Pradeep Kheruka, the chairman at Borosil Renewables, joins us on the show. Hi, Mr. Kheruka. Good morning and always good to see you in. Give us a couple of numbers, sir. The problem for me is the margins. Have they bottomed out as of now? Will they start improving from here on? And in your India operations, if you could tell us, what is the current utilization levels and how do you expect this revenue run rate per quarter to scale up?
So the margins have been very low in the last few months. I would expect that we should imagine that these have bottomed out. We are running at about 94% of installed capacity, which is a lot. Within 12 months of having started up our third furnace. Normally, people expect to ramp up at a much slower rate. We've been able to ramp up very, very rapidly. We are looking forward to a situation where we would be achieving greater economies of scale and other economies and production cost, also in productivity. We've been able to convert our product range into the new products which have been launched by the market. And so we are working hard on that. So therefore, we might have bottomed out, I might say. Having said that, yes, I'm sorry?
Yes, sir. Please go ahead.
Yeah. Having said that, the world at this moment is probably at its most bottom from the standpoint of competition from China, both in India and abroad. So we find that the Chinese prices are impossible in the sense that you cannot make modules at the price at which they're selling it. So clearly there's a huge amount of support from their government in subsidies. I think, yes?
Yeah, Mr. Kheruka, but when you say that things are at the bottom, good morning, Prashant here, something has got to change, right, to catalyze that bottom and then, lead to prices on the other side. What will that be, in your opinion?
I think recognition by governments in India and in Europe that what we are seeing today is a predatory pricing on an unprecedented level. This is not competition by any stretch of imagination. This is predatory pricing, pure and simple. So if this is addressed by the governments, then I believe that it would be on the way up.
Okay. Sir, good morning. I just wanted to understand a little more about the business. You had started with a market share, domestic market share of close to 20% in 2023. Can you tell us what is the market share right now? How have things changed in the last 1 year? And what is the guidance over the next 12 to 18 months?
See, in the last 1 year, modules continue to be made in India, primarily for export. And so the demand for glass continues to remain very robust until other companies came into the market, which was sometime in the middle of this year. We didn't see much glass coming in from other Indian suppliers. Now we are seeing glass coming in from other Indian suppliers. I would say that market share remains unchanged. In any case, so far as our ability to sell glass is concerned, there's absolutely there's no problem at all. We have a lot of demand, and we have more demand than what we can supply, frankly speaking. The problem is the prices,
when you say market share remains unchanged, what is the absolute exact market share right now, and what is your expectation?
To be honest with you, I don't have it off the top of my head. The exact percentage of market share, primarily because as far as we are concerned, we have no dearth of orders, and we won't for some time to come. So it's that, of course, what has happened is that orders abroad have dropped because main markets were Europe and Turkey. And in Europe, we find that module manufacturing has slumped hugely. And Turkey has been facing the problem of inflation and very high interest rates. So even they are under stress in terms of manufacturing. So whatever we were exporting, we have been able to shift to India without any difficulty at all.
Okay. All right, Mr. Kheruka, final question then before we let you go. Since margins have bottomed out, where do they head to? Do you think in the next couple of quarters you can get back to mid-teens? You were doing 20% just a few quarters ago. And also, you could possibly look at raising some money, some equity. Could you tell us for what?
The primary reason that we are looking at raising money is to retire debt. We are very debt averse, frankly speaking. And we'd rather be safe than sorry. And the idea of doing it is that once we have more equity in the business, we have more strength to deal with whatever the future has in store for us.
Mr. Kheruka, very briefly, do you believe, there's no way to know, but do you believe that we will see government action in the near future on the dumping bit?
I cannot see where else India will go, because the way that the government has been leading the charge in Atmanirbharta, which is something that I support greatly. The surrendering energy security to China would be a colossal mistake.
Okay, you were going to give us a number, sir, on the margins. Do you think it can go back to mid-teens? And since you're looking at raising money to retire debt, what is the current debt in books?
The current debt is about 538 crores, including the debt that we have used for the company abroad. So we are working there as well. So we want German banks to fund us over there. So yeah, 538, it's not a lot by any stretch of imagination.
All right, we will let you go on that note. Thanks a lot for joining us. Appreciate your time here on CNBC TV18. That's the chairman at Borosil Renewables, talking to us about their business. They're looking to raise 500 crores as well. And they also talk about how their domestic market share continues to be stable around that 20% mark. They also say margins have bottomed out.